Good morning and welcome to my YouTube channel. I'm Barbara Scarlett. I'm a local real estate agent here in Niagara. If you're new to my channel, I create short videos about the Niagara region and the local real estate market with a heavy focus on Fort Erie because that's where I live and breathe. Following the Bank of Canada's decision to lower rates by a quarter basis point, real estate agents expected that their buyers were going to be, flooding the market with this rate drop. Now, in the past 3 to 4 weeks, let's take a look at what's been happening since that drop. Before we dive in, if you find my videos informative, please remember to subscribe to receive notifications when I release some new content. Also, share my channel with anybody that's interested in learning more about the Niagara region. The Bank of Canada reduced the rate by a quarter basis points, we've seen the inventory increase from 2,877 listings in Niagara to 3,078. Clearly, inventory is building up faster than sales are happening, resulting in a buyer's market, particularly where I live, which is in Fort Erie. So why hasn't this anticipated rate cut spurred more buyer activity, allowing us to offset the inventory? Let's break it down. When the Bank of Canada adjusts its benchmark rate, it directly affects the variable rate, which are right now still well over 6%. For those that are not quite sure how the Bank of Canada rate impacts mortgage rates, well, the Bank of Canada rate is the rate at which the government lends money to the banks. This variable rate fluctuates along with the Bank of Canada rate. In the past 2 years, this has proven to be quite risky given the amount of fluctuation and increase in rates that we've seen. In fact, I haven't seen many people opting for that variable rate in the recent market. Well, the variable rate has not dipped so much. We do see fixed rates dipping. That 3 to 5 year fixed rate has great rates out there right now, but it's not directly tied to the Bank of Canada rate. Rather, it's affected by the bond yield. Right now, we can get 3 to 5 year rates just slightly under 5% with an insured mortgage, which is where you have less than 20% down, or just over 5% with the uninsured mortgages. For the Bank of Canada to bring variable rates down to match these fixed rates, they would actually need to cut their rate by another 1.25%. And most economists do not predict this happening here in 2024. In the market today, we have sellers currently on variable rates still faced with affordability issues, and they have been sitting on the market, congesting the housing market. There have also been sellers that have been trying to hang on, and they saw that quarter basis point, and that was a signal to them to get onto the market, expecting buyers would start shopping, further congesting our market. Now, let's talk about buyers. Buyers, on the other hand, are saying prices remain too high and they have not yet seen enough incentive in rates and price drops to enter the market. Now, this is not true for every price point. While some buyers have reacted since the rate cut, particularly those that are shopping under the $400,000 mark. This price range is geared towards our first-time home buyers, and due to its affordability factor, while the broader market hasn't seen a significant movement. Properties that is under $400,000 in Niagara are in high demand because they are among the most affordable. And buyers recognize that if rates continue to drop, which they are suggesting will happen, this segment will see rising prices before higher segments do. The activity in the lower price range is inevitably putting downward pressure on prices in the higher price brackets. For example, currently we have an abundance of listings between that $600,000 and $700,000 mark. Okay, now here's my suggestion. If you're a buyer struggling to find a property within your budget due to competing offers, such as under that 400 mark, consider stepping up your price point and making an offer. Look at prices that are $50,000 to $100,000 above what your budget is. You might find a seller who is extremely motivated to sell. While some sellers don't need to sell urgently, there are definitely sellers out there that are ready to consider offers. Markets are cyclical, and right now we are definitely in a buyer's market, specifically here in Fort Erie and even in parts of the region, and it will not last forever. Rates will get more affordable. Prices have been starting to settle, and before you know it, we will be looking backwards at this market saying that that was a great deal. I should have bought it. Okay, what's happening on my desk for this weekend? I am hosting an open house at a brand new listing of mine. It's at 630 Albert Street. I'm hosting it this Saturday from 11 to 1. If that seems like an unusual time, it's because I've been finding that out-of-town buyers are arriving early and asking for early entry to the property. So for our locals that already are here, just be aware, Saturday from 11 to 1. Now on Sunday, Dennis will be hosting an open house at my listing at 454 Viking. This is an end townhouse unit. It is beautifully upgraded, so much natural light. It has 3 bedrooms, above grade, beautiful egress windows in the basement for further finishing. The seller is actually in the process of fencing the yard, creating a great outdoor living space with privacy. There's already a gorgeous composite deck that you have, so come out and check out this property. You will find that these 2 listings as well in the links below. Thank you as always for tuning in. Remember to subscribe and share it with a friend that can use any information about the Niagara region, about the real estate market here in Fort Erie. Have a great long weekend, everyone.